Hello guys and welcome to my channel. If today is your first time coming across my channel, kindly do me the favor to hit the subscribe button, put on the notification bell so that anytime I post an amazing content like this, you'll be among the first to be notified. Now today I'm going to show you a simple strategy that you are going to use without indicator. That means if you are using it on your mobile phone, you don't need indicator. Though I have this strategy in place whereby there are materials for those who are new into the trading platform. So those materials are what is going to serve as guide for them to easily identify this area without stress on any time frame, both on Forex and the synthetic indices. So if you want more about the strategy, you can check my WhatsApp number in the description below. But what I'm going to be teaching you today is how to use this strategy on your mobile phone to catch spike on the synthetic indices, that is the boom and the crash indices. Now you can see this is on crash 1000. Let me show you that for boom 1000. Okay, sorry, this is on boom 1000. So you can see I sell and at the same time I took buy. So I'm going to take you to the chart now and show you how this strategy works without indicator. Very simple, very easy. Now coming to boom 1000, you can see price has been selling throughout this week. We have been seeing series of sell order, but before now price have printed some information, so which we definitely leverage on. Now for those of you who understand market structure very well, you get it easier and this strategy will work for you as fast as possible, in as much as you can grab what I'm going to say here. I don't want this video to be too long. Now the first thing, price dropped. This was the highest point price got to, and price later what dropped up to this point, up to that point. So immediately price dropped at that point, price started doing what? Buying. That means price started buying all the way up. Now at this point there was a break of structure, so I'm going to show you. Let me take out this. So I will show you where the break of structure is. So we had the first break of structure here. Right? And what happened next? Immediately price break structure, and other block will be created. So we had another block, that means a bullish order block this time around. A bullish order block this time around. So a bullish order block was created immediately, and this was the the candle that led to the break of structure. This last bullish candle was the one that led to that break of structure towards the upside. So immediately price broke structure and got to an area of resistance, price started falling again. Now if you are familiar with the how you can identify a valid order block, price dropped all the way from there. Immediately it entered the bullish order block. What did you notice? Price triggered up because there was orders left there, so price pushed up immediately, indicating that there's orders, and then price begin to move all the way up. Then price moved. After some hours, price moved, breaking another structure again towards the upside, so making it the second break of structure. So I'm going to draw that out now. Don't worry, we are getting closer to the strategy in details. I just have to tell you what you need to see before you decide to either open an order. So the second break of structure occurred here at this point. Like I told you that immediately there's a break of structure, other block will be created. So immediately we had an order block right here. So that bearish candle, that red candle, was the one that led to the break of structure. So this is where we are going to now. Since this first one has been mitigated, let's delete it. So you see that first one has been mitigated, but this one was not mitigated. That means price didn't get inside it. Price started buying all the way up. Price never came into that other block. Price went straight up. But after a while, price came into that other block. Price definitely came into that other block after some time. So let's extend. Now this is where we are coming. So immediately price got, let me zoom out a bit. Immediately price tapped into the other block. We expect price to do what? To push up. Now there are criteria for identifying a valid order block. If you are new into trading and you've not understand those concepts, please you can go online and definitely get it. I have some videos talking about order block. Then in the strategy I talked earlier on, everything is already there. So if you are going to join the class, you can join the class, then you get the full details of the strategy, and then you will make the market consistently. Because what we do there is talk about what works, not just giving you materials and then at the end of the day leaving you on your own. No, we discuss everything, and then there are video guides on how you go about everything. So there's no way of joining that class then at the end of the day losing. So what happened next? I modified this order block down to the lower time frame, that is the H1. So on the H1 I opened a buying limit. Leave it there. Immediately price came in and tapped into that other block from the H1. You can see it reacted and it would buy. This is how you can catch spike for either boom or crash. I will advise you focus on the higher time frame. And now, how do you do that? Wait for an engulfing bar. This is when you use an engulfing bar, it will help you to ease the stress. It's going to save more because an engulfing bar will definitely lead to a break of structure on boom and crash. An engulfing bar are those bars that goes above the previous candle. Now, like this one here, this is an engulfing bar. You can see that, that bullish candle, we can refer to it as an engulf because it engulfed the red candle, and not only that, it result to a break of structure towards the upside, creating an imbalance in the market. So when price will come back to fill that imbalance, it's definitely going to spike. So these are areas you need to wait. This one doesn't have to do anything with putting indicators or anything. This is pure price action. So if you can practice this, definitely you are going to see result. Now let me also show you something in this very boom 1000 currently now that is happening. Did you know that at some point, this price here was the one, this movement here was the one that gave us the highest point in the market, right? And what happened? Price came and closed below it. So more or less we have it's more or less like we have a break of structure here now. Let me show you. There's a break of structure at this point. You notice that there's a break of structure there. So when you check very well, you will notice that we have an imbalance at that zone, a huge imbalance. So meaning that there's high probability that when price come into this point here, into this zone, let me mark out something for you. Okay, let me use the horizontal line to mark it out so that I can identify how you will know that block. So the last candle and this other candle here, That is this last one. So you see this space in between now. Price will definitely come and it will sell at that zone. Price is definitely going to sell at that zone because we have form of imbalance in that area, which is definitely going to push price towards the downside. So just practice this thing. Now let me show you that this thing really works. Let me show you that of the bullish order block I explained earlier on. I'm going to change the color of the horizontal line so that you can get it clearly. I'm going to change the color. So this was the point where we have the horizontal line. Sorry. Okay, mistakenly deleted it. Take your time to watch this video very well. It's going to be a very good video that is going to open your eyes to how you can identify good areas on the chart. So you can see there is one. The top of the red candle that preceded that led to the break of structure all the way up. So you can see immediately price tapping. Let's check for that or the buy. Immediately price tapped in. Do you see what happened? This bearish candle closed above it. That was why. So similar thing is going to happen here, but this case is very close, so you can leverage on that in lower time frame. So if you're able to master this very well, very well, very well. Now let me show you another area we should be expecting price again before I call it a day. Right here we have some form of rejection there. Then we have another one here. So that zone, when price come there in future, we should be expecting to see some sort of rejection towards the downside. So, but if you don't know how to highlight all these things on your chart like this, then don't hesitate to join the training class where I have materials already on ground that will do all that for you. You are not the one to mark it. It will highlight it for you perfectly clean, and you can also use this strategy both on currency pair, synthetic indices, in fact even as well as crypto. Exactly, even as well as on the crypto market. So it will definitely give you all those outcomes you are seeing. It is not a guesswork. Now let me log you into my um, currency account and show you another proof for today. This is on gold. You can see the outcome on gold. So this strategy is still the one that gave us this result on gold. You will see we use the minimal lot size and everything. So if you're interested, you can message me. Then try it out. Then let me know your opinion in the comment section. I'm still going to be posting more strategy as time goes. Thanks for watching. See you in the next one.